Hey guys, I welcome you all. I just want to do some few pairs ahead of this week. So it's a Monday SA time. To begin with Nasdaq, we've been expecting a fall from this choppy price movement, and I still believe that we are yet to see price fall on Nasdaq ahead of this week. I am still keen on watching and hoping to see what price will unfold like from the current price moment. So yeah, I might as well adjust my invalidation level to this point, but I'm hoping to see, and I'm hoping to hold and to keep my sell thoughts as long as price is trading below this invalidation level. So yeah, that's it guys. And again, what might be happening is that we might be observing a 1-2-1-2, which will signal and extending that wave. If this is a 1-2, then the wave 3, it has to extend. Then instead of this being C, we can assume this as being wave 3. So it's going to be a big one if price can hold if price can hold below this level. Then I can say, okay, then this is an wave 3 extension. Then you can expect price to drop even deeper, then having the assumptions that okay, perhaps we are observing a zigzag formation when we see the first leg being an impulse wave. Meanwhile, we are expecting a correction. Then it becomes pretty obvious that okay, zigzag might be in form. So yeah, let's go to EURUSD. We did EURUSD. I shared this analysis on my free Telegram group, and yeah, on EURUSD we have this bigger picture. I've been following EURUSD ever since this plunge, this chop movement here. So yeah, we've been expecting that at least price, it has to take out this low. Then that's when I can consider my bullish possibility moves. So yeah, this is a daily time frame, and then going deeper into the 4-hour time frame, I can see that focusing on this wave C move, we're trying to check on how possibly price might unfold, and how is it possible that we can get into this 50% target. So we have this rally as a wave C, and then we have this 1-2-1-2 shows extension, wave 3, 4, 5, the end of wave 3, and then we're expecting wave 4 retracement, which according to the Elliott wave principle, it's not a rule, but it's like a guideline that the wave 4, it is quite okay. The wave 4 move, it is usual that it ends along the wave 4 of the previous degree. So this is the previous degree, and then we can expect wave 4 to end at around these areas, which coincide with our the 8.2 retracement level and our 50%. So these will be our focus targets. And then we went on to see price pushing a bit up, and then again pushing a bit up. We entered at around these areas, and then so we are currently running in profit. So yeah, so here's EURUSD, and then from here ahead of this week, I'll be hoping to see price at least testing the 8.2 before actually falling. So we are currently holding this buy with our invalidation level from here. Then we'll be shifting it to here, and then locking some profit and then from here we will wait to see how price reacts along the 38.2 level, as it has broken past the 23.6 level, which seems like it failed to hold. So from here we can expect to test the 38.2, past the 38.2 to 50% level, and then we will be considering our short entries until price breaks past this level. Then we invalidate the shorting scenario. Then we can consider that okay, price is indeed bullish. But as for now, we are not hoping to cut because we don't know what the market will unfold like next. But we are hoping that it can follow us until we reach our target. So yeah, that's it for EURUSD, and then let's jump to GBPUSD. GBPUSD on the daily time frame, checking on the bigger picture, it seems like price completed an ABC move, which we're showing the change in trend from uptrend to downtrend. Price fell quite heavily, and then which we assume it's impulsive. It can be wave 1 or wave A, expecting wave 2 or wave B, and then wave C to take price lower. So past week we were hoping to see price correct before we enter a buy to around these areas, but unfortunately we didn't see that retracement, so price just went up, which I assume if this is a wave 2, then it's a wave 2 of a zigzag, which is quite sharp, and it characterizes the wave 2. It carries the characters of a wave 2, so I'm not surprised if it unfolds like this. And then price seemed to have found resistance at around the 61.8 level, so which we hope to see price dropping further below. So what has to happen now is that we see price it rejected quite strongly, which we assume this might be signaling a change in trend. So what happens is that we do not say this is final, indeed a change in trend it might be informed, but we have to be biased on our decisions. We mustn't act like we know 100% what's going to happen. We live based on assumptions that are supported by facts. Okay, the change in trend, it might be significant at this moment, but again you might see price just correcting and then edging a bit higher, signaling that okay, price might have failed to hold at the 61.8, and then we still have another level, which is the 78.6, where we can expect price to find resistance going down. So this one is not just final. We yet to observe what price might be offering us. So yeah, for now we just live with the fact that price might be changing in trend, keeping our invalidation level close enough in case price decide to continue the short-term trend, which is down. So yeah, it's quite straightforward. Just expect price to correct and then fall down, and then if it happens to again correct up to finish at the higher level, then it's fine. We're going to join the bearish move. So yeah, that's it for GBPUSD. Let's move on to USDJPY. Okay guys, so on USDJPY, the 8-hour time frame, we see price making this 1, 2, 3 with clear 1, 2, 3, 4, 5 interior wave count, and then we see the wave 4 retracement, and then we see wave 5 as an ending diagonal. So what we can expect from now, what we've been expecting to see, is a correction move which will test at least the 50% level. So now we are here, we see price is still correcting, and then okay, I've been expecting price to edge a bit lower, but as price holds at the moment, it seems like we are seeing a complex structure which is choppy. But what I'm observing about the swings is that they do not overlap. The swings, they don't overlap. The swings, they don't overlap. So what does this say to me? This screams possible wave counts, which includes a triangle move, which I assume that measuring the retracement of wave A, trying to measure the retracement of wave B. Then I'm hoping that price might hold at around the 38.2 level, keeping in mind that if price breaks this invalidation level, then I have to cancel out the thought of this price pattern as being a triangle, because we know that the swings of a triangle, they do not overlap. So we are expecting a wave E to end below wave C, as wave D has ended just above wave B. So it's simple as that. As from now, we can expect a three-wave move, ABC move to wave E, and then we will see the final wave C move. As you can see here, ABC move, ABC, and then we're expecting another ABC before we can see the 1, 2, 3, 4, 5 rally to wave C. And they are strong. There is a character when you see a triangle pattern in form, it signals that okay, the final leg to follow, it's a final move of that particular pattern. So the final leg, the final wave C, it may signal that it is the final leg of the correction before we see price changing its trend to up. So yeah, it's pretty much straightforward for US dollar JPY. A complex structure might be in form. Let's see, A, B, C, W, and then X, and then A, B, C as a wave Y. So that's the alternative thought that I hold in mind at the moment. Let's move on to the last one, which is gold. Okay, gold. Okay, moving on to gold. Going to this week. So I'm having this shorting idea that okay, gold. We've been following gold. Those who've been following me, they know that we've been analyzing gold from the previous 2 weeks. Yeah, previous 2 weeks. So we shorted gold at around these areas, and then we were taken out at this area. So this small profit, then we're taken out. So I'm still having that idea that gold, it has to fall regardless of what might have happened at the moment, because we do see very often price reacting as a flat correction. where we see wave B overlap the start of wave A, and then you see wave C. So this one is pretty much convincing with the way it has unfolded. So right now we're assuming that we're seeing a wave 1. We must find a retracement for wave 2 to enter a short on gold around these areas to find wave 3. So we are hoping to go short on gold, and then we hold this idea as long as price is trading below these areas, because it is pretty much significant. That's why I actually like the Elliott wave, because it lets you know when you are wrong and when to not consider the idea that you have at the moment. So we are willing to hold on this idea as long as price is trading below these areas, and then price breaking here, it will confirm that indeed we are observing a bearish rally. So on gold, I have an alternative idea, which, okay, let me just jump into it. I have this alternative idea. We've been long on gold at around these areas. We've been long on gold at around these areas. So being long on gold at around these areas, it helped us to capitalize just a bit of profit. But let me say that, okay, maybe we're just taking out a break even. So we're hoping to see that gold would at least come and test the 61.8 level before we actually see the bearish rally. We can still consider this rally as valid. We can still expect gold to come and test the 61.8 with a complex correction structure in form. Perhaps this might be a wave A, wave B, then we might see a wave C, which will change this whole structure from being just A, B, C into WXY instead. So this is wave A, B, C, X, A, B, C. Then you see price giving us a reversal pattern and then dropping lower. So from here, how long are we considering this bullish rally? We are considering this bullish rally as long as price is trading above this invalidation level. So this invalidation level, it holds the whole mentality about us thinking that gold might be pushing up. Yeah, so yeah, guys, that's it for me ahead of this week. Do a little more. Maybe use these maybe some might be okay, still on play for others, but we've been short here with my clients. We've been short here. And then we're hoping at least price to test at least these levels here, but we used our Fibonacci retracement to measure how long we might think price may rally. So the minimum target for a correction, or most of the corrections, regardless of how it might be unfolding, but most of the minimum target is the 50% level. So this is the first target, second target 61.8, then the third target it's the 78.6 target, which hold, because this is where we will be placing our invalidation level for this scenario. So yeah, that's it, guys. I just hope you have a good trading week, and thank you again.